Rand takes a knock after poor GDP figures and as coalition talks continue. The Rand had a poor start to the week and fell on Tuesday evening as uncertainty grows around possibly coalition partners with the African National Congress ANC. The Rand was trading at around 18.70 cents Rand at the close of business on Tuesday evening. Reuters said this was more than 0.7% weaker than its closing level on Monday. Sean Morrison, a senior market analyst at IG, said that the Rand has underperformed when compared to a broad basket of its currency peers. He said that this suggested continued against with regard to coalition uncertainties as the ANC tries to navigate creating a government after not achieving an outright majority at the polls. The Rand was erring on the side of caution, pricing in some of the economic risks a business and friendly coalition may provide, Morrison added. Anchor Capital also noted that the Rand was weakened against the dollar due to the first quarter of 2024. Yesterday, Statistics South Africa said that the slump in the mining and construction sectors hurt the economy. Gross domestic products shrank 0.1% in Q1 due to the decline in the production sectors of the economy. On Tuesday, the Rand has recovered somewhat and was trading at 18.68 at 9:20 a.m. The Rand was trading around 20.37 Rand to the Euro and at around 23.93 Rand to the Pound. Patchy economic growth. Nedbank noted in their Economic Insights report that SA faces another year of patchy economic growth given harsh operating coordinations on the supply front, weak domestic demand, and a constrained global landscape. The bank predicts that in the first half of 2024, high interest rates will continue to strain household finances, weighing on consumer confidence and demand. Soft demand and lower international commodity prices will undermine production across sectors on the global front, the report said. Nedbank said that it expects these pressures to start easing slightly in the second half as inflation shifts down a gear and the monetary policy easing cycle begins. How will the financial markets react to a coalition-led government? Andrew Ballman, Managing Director of Deal Leaders Africa, said that the South African market will not react favorably to a coalition government. As the Electoral Commission of South Africa (IEC) continues to tabulate the votes of the May 29 election, research organizations have made predictions that the African National Congress (ANC) will most certainly lose its majority. If this happens, the ANC will be forced to form a coalition with one or more of the various political parties in South Africa. The ANC might have to consider forming an alliance with one of her major rivals in order to maintain its hold on power, Baumann said. The ruling party appears so far to be doing as poorly as the worst projections. This is being indicated by a model developed by the state's own research agency, he added. According to projections from the Council of Scientific and Industrial Research, the ANC is currently on track to win 42% of the votes. The CSIR said it based its research on an extrapolation of early tallies released by the IEC. The research body said it projects that the Democratic Alliance DA will get 22.3% of the vote. It said that the controversies where MK party would get around 12.8% of the vote and the Economic Freedom Fighters EFF would get around 9% of the vote. Politically, this may be good news, but markets do not like the uncertainty of unstable coalitions, Barman explained. These projects give the ANC the option of partnering with the market-friendly DA, which markets would undoubtedly prefer, or one of the two populist parties that advocate for the nationalization of mines and banks. The possibility of an unstable coalition is causing concern in financial markets. As such, a coalition would likely demand policy changes that could discourage investment, he added. Barman used the rand's strength to the dollar as an example. For instance, the weakening of the rand against the dollar, reaching 18.66 rand to the dollar yesterday, is a concerning sign for investors and businesses, he emphasized. Barman argued that investors often prefer a stable or appreciating currency to migrate risks. Uncertainty surrounding political events, economic policies, or global market conditions can contribute to currency volatility. When investors perceive uncertainty, they tend to seek safer assets, which can lead to a weakening currency, he concluded. No idea what this new government means. Ivelo Vaselinov, chief strategist at EMSO Asset Management, told News 24 that investors will have a fair amount of uncertainty. We remain in something of a no man's land at present, with the still sizable uncertainty over the ANC's final tally keeping most options to the next government on the table, Vaselinov said. He said that South Africa assets will most likely remain volatile until investors get more clarity about the coalition government. And that's it from Injibs Network. Stay tuned to our celebrity and gossip news.